What's going on YouTube? The Creative Investor here. If you are new to the channel, I follow everything NIO. NIO is my biggest position, so if you want to stay up to date on everything NIO related and in the stock market and also real estate, I'm a real estate agent, hit the like button and the subscribe for the YouTube algorithm. That will really help this video get pushed out to more people to help them as well. But this is not financial advice, so do not take it that way. Contact a financial advisor if you are unsure of anything that is said in this video. This is just my perspectives and my opinions. I will also be giving you guys my opinions at the end of this video, so stay tuned for that. Now I do have a video for you guys to watch that is very cool that CNBC put together, but first we're going to look at this article on CNBC. It says NIO deliveries in January quadruple from a year ago, signaling a strong start to 2021. This was posted last night, February 1st, 2021 at 10:01 p.m. It says Chinese electric automaker NIO said it delivered 7,225 vehicles in January, more than 4 times the number of cars delivered during the same month last year. Its rival XPeng said it delivered 6,015 electric cars in January, a third straight record month of deliveries. It says Chinese electric car NIO is off to a solid start for the year, even if it has a long way to go to catch up with market leader Tesla. The company said Monday it delivered 7,225 vehicles in January, more than 4 times the 1,598 cars delivered during the same month last year. Last month's figures also marked NIO's 6th straight month of record high deliveries, bringing the startup's cumulative deliveries to 82,866. It's taken NIO about 6 years to reach this point, while Tesla delivered 180,570 cars in the last 3 months of 2020 alone. As NIO's New York listed shares have climbed 17% for the year so far, just shy of Tesla's 19% gain. Both stocks are outperforming the S&P 500, roughly 0.5% wise. Shares of XPeng, another U.S. Chinese electric car company, are up 15% for the year so far. XPeng said Monday it delivered 6,015 electric cars in January, a third straight record month of deliveries. The company P7 sedan accounted for more than half of last month's deliveries, for a total of 18,772 since its mass rollout began in late June. Now we're going to go ahead and play CNBC's NIO video.
Electric automaker NIO is making its mark in the industry.
NIO, which is the Chinese electric automaker, which many people look at and say, look, this is the company that's going to challenge Tesla in China.
Since its initial public offering on the New York Stock Exchange in September 2018, the company's stock has risen from a 52-week low of $2.11 to peak at $57.20 in 2020. That's an increase of more than 2,700%. But this automaker has had its fair share of challenges, including being caught in the middle of US-China trade tensions and dealing with the economic effects of COVID-19.
So how did NIO, which was at one point on the brink of bankruptcy, rise from the ashes to become a major player in the electric vehicle industry?
In 2015, China's Premier Li Keqiang announced a Made in China 2025 plan to transform the country from a manufacturing hub of cheap, low-value goods to one that produced high-tech products in 10 areas, one of which was the electric vehicle market. To that end, the government offered subsidies to startups. This created a fertile ground for 45-year-old entrepreneur William Li to grow his startup NIO, which he founded at the end of 2014. NIO secured early investment from tech giants, including Tencent and Baidu, and in 2016 released its first model, the EP9. It was a flashy race car with a top speed of 194 miles per hour and a price tag of $1.5 million. This model raised the profile of the Shanghai-based automaker on the electric vehicle map and among China's wealthy circles. 4 years after it was formed, the company beats its domestic rivals, Li Auto and XPeng, to become the first to file an international IPO.
So unlike Tesla with its gigafactories, NIO doesn't actually make its own cars.
Instead, it outsources manufacturing to a state-owned automaker in Hefei, the capital of Anhui province.
And the differences don't end there.
Instead of relying on a charging network like Tesla, NIO decided to adopt a different approach to its batteries, a service that many experts have called NIO's competitive advantage. Through a network of battery swapping stations, NIO users can exchange their battery for a fully charged one in 3 minutes, eliminating the wait time, which can be as long as 24 hours for big cars. As of June 2020, the automaker has established 135 power swapping stations in 59 cities in China. The Chinese government plans to standardize battery swapping stations in the country, ensuring that all EV owners can use common batteries at any facility, regardless of their car brand. This means that a NIO owner will eventually be able to swap batteries at a rival's battery swapping station. This has allowed manufacturers to sell EVs without a battery, effectively making the purchase much cheaper, while also giving EV owners the option to upgrade to a larger capacity battery in the future. In August, NIO unveiled a battery subscription service that allows EV users to choose battery packs of various capacities and pay monthly.
While these services gave NIO a loyal following, the company hasn't been immune to the headwinds within the wider auto industry.
As the global economy slowed in 2018, trade tensions between the United States and China were brewing. Domestically, the Chinese government reduced tax breaks for car owners, weakening demand in the largest automobile market in the world. These factors led to a 3% global decline in car sales, and production fell by 2.4% in 2018. Faced with mounting debt, management departures, and negative gross margins, NIO was struggling. As the electric car startup expanded, so too did its cost. In the third quarter of 2019, some $280 million was spent on marketing and flashy showrooms, 25% more than the year before, outpacing its revenue growth of 20%. To reduce cash burn and stay lean, the company embarked on a cost-cutting campaign, slashing around 2,000 jobs between January and September.
Just 1 year after its trading debut at $6.26, the perfect storm tanked the company's stock to below $2 at the end of September 2019. The cash-strapped company couldn't pay its workers on time at the start of 2020, but then the tide began to turn.
Help came in the form of a $1 billion lifeline from the local government of Hefei in return for expanding its existing operations, including the creation of a new headquarters in eastern China. As China's economy rebounded after the first wave of the COVID-19 pandemic, so too did NIO. In March 2020, the Chinese government announced that it would extend its subsidies and a tax break for new energy vehicles, which include pure electric and hybrid cars, to 2022. This has led to a bumper year for EV manufacturers in China, with 1.1 million electric vehicles sold in the first 11 months of 2020, up 3.9% from 2019. NIO delivered over 35,000 vehicles in the same period, more than twice as many as the year before.
But the company got a boost from an unlikely source. Thanks to the world's most valuable automaker Tesla, NIO's fortunes were turning around.
In 2020, Tesla's stock price had jumped nearly 7-fold. The surge encouraged investors to look for opportunities in other electric automakers. Some concluded that NIO was the next best competitor. As the company's stock price soared in 2020, NIO became the fourth most valuable automaker in the world, surpassing General Motors and Daimler by market capitalization at the start of December. Sales of electric vehicles are expected to increase from 2.5 million in 2020 to 11.2 million by 2025, before nearly tripling to hit 31.1 million by 2030. By 2030, Chinese manufacturers are expected to command 49% of the total global EV market, while European firms will take 27% and the American companies 14%. It is no wonder then that NIO has Europe in its sights, followed by other global markets in 2023. But it still has a long way to go before it can compete effectively with the industry's frontrunner, Tesla.
The success of these ventures will depend on NIO's ability to control its spiraling cost, appeal to foreign buyers, and expand its battery swapping network overseas.
what everybody has been waiting for, my opinion on NIO and investing in Chinese companies. Now, if you take into consideration the EV market alone, in 2030, China is expected to have 49% of the total market. And we can see what Tesla is already doing, and they have about a 20% market share. So if NIO can take a little bit of market share and even catch up, then we could see the same valuations with NIO as Tesla is seeing right now, and even more so, because a recent survey just found that 80% of Asian run businesses prefer Asian products. So with that, China has a very strong brand loyalty. So Chinese people would rather buy Chinese cars than American Tesla cars. So that's my opinion on it. I think there's so much room to go in the Chinese market, but you do have to be careful as far as Chinese companies, and you really got to watch for who is regulating these Chinese companies, right? Do they have SEC registered auditors, or could they be fraudulating their books? I don't think that's the case for companies that are listed on the New York Stock Exchange or any American exchange, because that's bad business and that's bad practice. If you guys remember, Luckin Coffee, that ended horribly. Now they're on OTC, over the counter, and the share price has dropped significantly. So I don't think it's in anybody's best interest to be frauding anybody. So I don't really think that's going to be going on, especially not at NIO, with a company that has so much to lose if they mess up this opportunity. But with that being said, China is a great place to be investing in. China is set, in my opinion, to overtake America's economy by 2030. They do still have a far way to go. They're a little bit under double what our economy is, but you definitely should have some part of your portfolio in Chinese companies. It's not a bad thing. So with that being said, guys, that is my input. I hope you guys enjoyed the video. If you did, hit the like button and the subscribe. It really helps me out, helps the channel to grow. And until next time, guys, peace out.